Hi, this is Dale Crosby from For Accountants. Welcome to today's special presentation on SMSF Auditor Independence. Time is running out for accounting firms to critically review the arrangement of the auditors of the SMSF funds for whom they prepare financial accounts. Firms have until the 30th of June 2021 to make necessary arrangements to engage independent SMSF auditors. If you haven't yet made a decision about how you'll manage this transition, now is the time to consider your options. Today's presentation will include a brief overview of these changes, what you need to take action, and what to look for in an SMSF auditor. Will run for about 30 to 40 minutes with time for questions during and following the presentation. If you do have any questions, could you please type them into the QA panel at any time during the presentation. We'll also be forwarding all registrants a link to the recording of the session. To begin the session, before I introduce the speaker, I'd just like to launch a poll just to get some feedback from the audience on what's important to you and why you've attended this webinar. So I'm just launching the poll. Could you please select one or any of these? Changes to SMSF auditor guidelines. I'm unsure about our current SMSF auditor arrangements, and I want to review options for appointing an SMSF auditor. 30 seconds just to finish the poll, and we'll close the poll and discuss the results before we begin the presentation. So another 15 or 20 seconds, and I think we're just about there. Fantastic. Let's share that poll. I want to know more about changes, 67%. I'm unsure about our current auditor arrangements, 7%. And I want to review options, 27%. Fantastic. Thanks very much for that feedback. Let's hide that and turn to the presentation. To get started, I'd like to introduce Stephen Watson, Managing Director of the National Audits Group. Of experience in audit and accounting services, having worked in the industry for the past 20 years. Stephen and his team have built a national business specialising in audit, assurance and financial reporting services. Stephen is an Audit Advisory Committee member of CANS and a registered SMSF and company auditor. Welcome, Steve.
Great, thanks, Dale. It's great to be here. Thanks for the great introduction. And thank you everyone for taking the time out of obviously your busy day to meet on this presentation. What I'd like to speak about today is obviously SMSF auditor independence. It's been quite topical over the last 12 months. And I've been heavily involved attending a number of webinars, discussion groups, and I've got a bit to share with you today. What I wanted to focus on just briefly in the first half of the presentation, as part of today's agenda, is the overview of the changes. So there's been various webinars, presentations, discussion groups, articles that's been posted by various parties over the last 12 months. So I didn't want to spend too much time on the changes, but I will just briefly cover off on some key areas that I believe the attendees today would get a lot of benefit out of. From there, we'll look at what to look for in an auditor. So you may be going through the current process of looking at your options. It's quite evident from the poll today that some people are considering their options. I didn't just want to present from the point of view of accounting firms looking at their options, but there'll obviously be some auditors on the presentation today, and I want to give, I suppose, some tips and tricks to them on how they may be able to present themselves to potential accounting firms that may want to utilise their services. So I'm going to pose a number of questions that you should be asking the auditors. Really break it down into three key areas. So looking at their people, their process, and obviously their final product. So I'll delve a little bit further into those key areas. And we want to leave enough time at the end of the presentation for some questions and answers. So As Dale mentioned, presentation will go for about 30 to 40 minutes. We'll leave probably 10, 15 minutes at the end, but depending on the questions that come throughout the presentation, we'll sort of determine the timing of today. So as I said, I'll start with the overview of the changes. There really hasn't been too many changes as I see it and what I've heard in terms of the APES, which is the Australian Professional Ethical Standards, 110, which is the Code of Ethics for Professional Accountants. That also includes the independent standards. So there weren't too many particular changes in that. It's probably just emphasised some of the key areas which I'll touch on. The timing of that was January last year, and it was pretty much news to me as well. Someone that's been involved in the industry and follows this quite closely. It probably wasn't until this time last year that it really got some traction, and people were starting to become aware of that. And that was probably on the back of the Australian Professional Ethical Standards Board updating their independence guide to the 5th edition in May of last year. So yeah, basically 12 months ago. From there, a number of practitioners, raised some concerns around, the impact that it might have on their firm. They may have to outsource it. They may have to look at, their options, potentially put safeguards in place within their own practice to ensure that they've got independence. So what the ATO and also a number of professional bodies, there's been a number of practitioners as well. The ATO's got a working committee that works with auditors, and they specifically looked at this, and they looked at real life examples, based on the history and what's currently happening in the industry to be able to provide some guidance, but also some support. So it probably wasn't until, I'd say, October, November, until we started getting some clarity around this. And then coming into January, February of this year, people started to realise that they needed to put a solution in place. They needed to consider their options. Do we outsource to a third party? Can we look at, going into a pooling arrangement with other firms? Could we look at doing, swapping audits between particular firms? And then probably only recently in the last couple of months, people have really got serious about it and, gone out to market to look at their options. So we've, as an audit-only firm who currently do self-managed super funds, we've had a number of inquiries. So through those inquiries, I've learned a lot in terms of what's important to these firms on, what they're looking for with their auditor. And as I mentioned in the agenda, that's probably the key part of my presentation, is for things that you need to look out for, the questions that you need to ask as part of that due diligence. Now, what's happening on the 1st of July? It's pretty much D-Day, so roughly 5 to 6 weeks away. The ATO is going to start a compliance and enforcement process in terms of complying with this. So there has been a significant grace period, and I think that was on the back of, it was all came as a bit of a surprise to most practitioners that, in May last year it was like, okay, well, yeah, wow, the APES 110 actually changed. It's got an effective date of 1st of January. So we've had an 18-month grace period in terms of any compliance or enforcement action, and the ATO has really just been focused on the education piece to ensure that firms understood the requirements of the code and what they needed to do moving forward. So I won't focus too much on these ATO focus areas. So, some firms were thinking that, we can put appropriate safeguards in place. We can demonstrate that management or trustees have taken responsibility for the preparation of the financial statements, for the coding of transactions, for the preparation of the tax calculations, in terms of making key decisions, setting up the bank feeds. We can really demonstrate that. And it probably took 3, 4, 5, 6 months to realise that there'd be a significant amount of additional work involved in, putting safeguards in place to be able to demonstrate that the trustees have actually taken responsibility. So, they thought about getting the trustees to sign off on trial balances that the accountants prepared, or, signing off to say that they've taken responsibility for a particular area of the management of the self-managed super funds. It then became quite evident that that would just add a whole other cost, time to facilitate that in the long run. So it's sort of a bit of a state of denial. We want to continue doing this. We've been doing this for years. Nothing's really changed in the code, but it's probably the ATO coming out and providing that particular guidance around the fact that self-managed super fund is self-managed. It's managed by the trustees. There's generally no more than, well, there definitely isn't any more than 4 trustees, but it could be very difficult to demonstrate from an accountant's or an advisor's point of view that the trustees ultimately take responsibility. So if you do decide to go down that track and continue to do self-managed super fund audits in-house, you need to document everything in terms of demonstrating your independence and really showing that the trustees have taken ultimate responsibility. And I'd caution that just on the basis of the additional time, cost, and whether or not it's really worth it at the end of the day. If you do, or if one of your particular self-managed super funds has an ATO review or an audit undertaken. So that's my personal view, that it's, just to eliminate the risk out of your practice, you should look to outsource to an independent auditor, whether it be through a pooling arrangement, whether it be direct to an outsourced provider, or putting a mechanism in place to show or clearly demonstrate that it's independent. And I'll talk about that a little bit later in terms of a structure that you may be able to put in place with two other audit firms, which may work for you. Another key area that the ATO will focus on post 1st of July is auditors that have restructured their business, or accounting firms that have restructured their business. So if an auditor's moved out of an accounting firm, they've set up, potentially an independent self-managed super fund audit firm. So that auditor's been part of that business for a number of years. They've been doing all of the self-managed super funds. Now they've decided to go out. You won't be able to demonstrate independence because you've been a key part of that firm. I think the rule is roughly around 2 years until you can start undertaking those audits of that particular firm. And it comes around probably the 20% rule that I'll talk about a little bit later as well. So that's talking about the referral source. So whether or not the source of clients from one particular referral party is significant enough to cause potential threat to your independence. So what I mean by that is whether or not the firm or that you're relying on as one referral source is a large proportion of your total fees. So as an example, if we use our practice, last year we did about 1,500 self-managed super funds. What I'd be looking at is to ensure that I haven't got more than 300 audits roughly coming from that one source. It could be deemed that I'm highly reliant as a firm or a partner on those fees. And if I were to lose those fees, if there's a conflict with that firm around issuing a contravention or issuing a breach, they threaten to basically pull the fees away from me, whether or not I'd be, self-interest threat on, tossing up whether or not I actually proceed with that breach. So very important. The ATO has come out and said basically there's a 20% rule around that, and that needs to be considered as well in terms of a pooling arrangement. So whether or not you can do more than 20% of the audits within that particular pool. So that was all a bit of an idea that came out around, I think it was September or October last year, that a number of firms got together. They said, okay, well, we can set up a pooling arrangement. We did see significant complexities in the consistency in those pools. So, going down that track, dealing potentially, and you'd have to say there'd have to be more than 5 auditors within that pool to obviously get below that 20%. Do they use the same systems? Do they charge the same fees? Have they got the same turnaround times? What's their appetite for risk, materiality, things like that? So having that completely inconsistent approach, potentially across 5 or plus more firms, really came to question on whether or not that was a workable solution. And the ATO's since come out, provided some very detailed guidance on their website as part of the ATO Independence Guide, I think they call it on their website, that they'll be looking very closely at these pooling arrangements to make sure that they don't potentially breach the Code of Ethics. Now, one particular area that's been quite prevalent in the independence standard for years is, whether or not that firm provides advice to the trustee. So what I've seen over the years is that firms that have been doing the audits in-house have really pulled back in terms of from the audits where the firm provides financial advice in terms of financial planning. So they basically said that no, we're not going to audit any of the funds where we do the financial planning. They've been quite adamant with that. That's been in place for obviously a number of years, and there were still some particular firms which I'm aware of that continue to audit those funds. But that's been pretty black and white in terms of auditors sort of stepping away and saying, look, too conflicted. The firm's potentially providing investment advice. They're providing financial advice, taxation advice. They're preparing the financial statements. They're preparing the fund's tax return, and then we're turning around and doing the audit. If anything were to go bad within that fund, who's to blame? Especially if the firm has basically been undertaking all of those different services. So it comes to question on how independent was the firm, and was the firm complying with the Code of Ethics. One item that's obviously been quite prevalent as well in the independent standards is close relationships. So we've done audits for particular firms where they obviously can't audit the partners' funds. So we may do the audit for 3 or 4 of the partners, but they've continued to do the clients or their clients' audits in-house. So that's been quite hard and fast. ATO and ASIC have highlighted a number of auditors over the years that audited their families' super fund. It was quite easy for the ATO to pick that up, and they obviously referred those auditors to ASIC and had enforceable undertakings where they either had to give up their registration or take a break for a number of years. And ATO has been quite critical of reciprocal auditing arrangements. I've been aware of these for years where firm A and firm B, they'll get together, they'll enter into a reciprocal arrangement. They might have 30 or 50 self-managed super funds, very similar numbers, where it's okay, well, I'll give you my super funds to audit and you give me yours. Obviously reliant on each other's business, and may impact on their self-interest around potentially losing that source of revenue. So these sort of things have come to the surface in the last 12 months. Practitioners are looking at their options and definitely deciding what they need to do moving forward. So what do you need to do? If you haven't already, definitely need to act now. Time's running out. You only have 5 to 6 weeks to have a solution in place. That being said, the ATO has sort of qualified in terms of their enforcement or compliance action from the 1st of July. The ATO will consider why there's been a delay in the firm restructuring. So you may have a little bit more of a grace period, but I wouldn't count on it. You have to have a very good reason why there's been a delay in the firm restructuring its SMSF audit services, and whether or not there's a documented transition plan in place, and around timing and as I said, the reason why there's been that delay. But that may get you out of it, but only for a short amount of time. So now's the time to act. You really need to research, consider, and choose. One thing that came to light throughout this review and the guidance and support that's come out from the professional bodies was around professional indemnity insurance, and seeing that the code has actually been effective, or the changes to the code were effective from the 1st of January 2020, so roughly 18 months ago, whether or not your professional indemnity insurance would actually cover for any claims, because you potentially may not have been complying with the law or the code, so to speak. So I'd strongly recommend, if you have continued to do audits for the last 18 months, that you check with your insurer, just in case there are any claims for those audits that you have completed. And especially, obviously post 1st of July, if you want to continue to go down that road of doing the audits in-house, you just need to make sure that you're covered, and a potential insurance claim isn't paid out. So a couple of different options. You've obviously got to get out there and research. You are running out of time. There's quite a number of self-managed fund auditors, accounting firms, obviously in the industry and in the marketplace, so to speak. So some of those options that you need to consider, whether or not there's a full outsource model. So basically just get out of auditing, give it to another firm that specialises in it, can do it quite cost competitively and do it well. You could obviously look at pooling arrangements, talking with other firms around, pooling the funds together, but just remembering the 20% rule that I spoke about earlier, and looking for that consistency in systems and processes and fee prices and turnaround times. Or there's another option that you could consider. This is the one I mentioned earlier, is if we take as an example, 3 firms looking at each other, very similar numbers. So let's hypothetically say that they've all got about 150 to 200 self-managed super funds each, and we'll call that firm A, B, and C. So potentially and if you could identify this with, obviously firms with similar interests, or you've got a good working relationship with them, look at giving firm A would give their audits to firm B, then firm B would give their audits to firm C, and then firm C would give their audits to firm A. And once that transition was in place, it'd be a set and forget. There might need to be some readjustment for differing numbers, but obviously working, well, as I mentioned, potentially firm C working with firm A to work with that arrangement. That arrangement, once it was in place, would ultimately be considered independent, and you could move forward on that basis without losing too much revenue, and you could continue to provide that self-managed super fund service to other potential external accountants as well. So make sure you allow enough time to make these considerations. Don't leave it till the last minute. You could also look at trying a couple of different options just to spread your risks and not put all your eggs in one basket. So just going down and rushing this decision and deciding to give it to one particular firm. You may want to set up a panel of different auditors just to sort of test the waters, see how they operate, see how you can develop that relationship and work together, over the next sort of 6 to 12 months. See what works, see what doesn't, and then you might want to make a further decision at a later date. So that was the first part of the presentation today. As I said, I wanted to really focus on what to look for in an auditor, just to give you some insight into some of the questions, some of the things that you should look out for, based on a number of inquiries that we've had in our practice over the last 12 months, and what I've heard out there in the industry, and what people are doing from an auditor point of view, but also an accounting services point of view.
Stephen, before we continue, just to remind the audience that if you do have any questions, please enter them in the chat panel or question panel. There are no questions at this stage of the presentation, but if you'd like to post questions in the second half, then that'll give Stephen the opportunity as we come to the end. So please use that opportunity. Stephen, back to you.
All right, excellent. Thanks, Dale. Yeah, as I mentioned, so yeah, what to look out for in an auditor. So the 3 Ps: people, process, and product. That's what I suppose built this presentation on. Some of the key questions, which I'll just briefly touch on, how many qualified and accredited SMSF auditors are on the team that you're looking at? What's the reputation of the firm? And key questions to ask in terms of their experience and knowledge. So I just wanted to delve further into some of those key aspects. So looking at the reputation of the firm, so doing some research on the firm and its people, so really looking at websites, looking at a bit of history, how long have they been around, or how long have they been in business, How many years experience do the key people have? So the senior managers who ultimately will be making decisions in terms of queries and things like that, and also the self-managed super fund registered auditors within the practice. How many years experience do they have? Where did they come from? You could also consider undertaking a company search of the firms, just to have a look at who owns the firm, how long has it been registered for, who are the directors, things like that. So really important to understand the firm and also its people. Another key aspect in terms of the people, what is their technical knowledge? Do they have a thought leader within the practice that's highly involved in the industry, that's constantly looking at technical matters and sharing that with the professional community? Do they run, or you could ask the question, do they have internal training sessions for their clients? What I mean by that is that do they host training sessions for accounting firms on what to look out for when they are preparing financial statements, how best to present it for audit, what they can do to increase their efficiencies within their practice, and also getting it through to audit, getting the audit done efficiently and minimizing queries. So how much do they work with their accounting firm clients, and what feedback do they give? You could also have a look at what materials are available on their website, what blogs do they write, do they have regular technical materials coming out for their accounting firm clients that those clients could potentially use, or sorry, those accounting firms could use to pass on to their self-managed super fund clients. That'll really give you a feel for their expertise and also their technical knowledge. Probably one of the most important things that we get asked is, okay, well, how quickly can we get the audit? What's your average turnaround times? How many employees do you have within the practice, and are they dedicated self-managed super fund auditors? What are their current, excuse me, what are their current self-managed super fund numbers? So how many did they audit in the last 12 months? How many new clients do they have? Are they anticipating a large level of growth? Have they got a number of new clients coming on board in the last couple of months, and how are they going to service those into the future? Are they a dedicated audit firm, or does that firm provide other types of services? So as an example, if an accounting firm is going to another accounting firm which provides multidisciplinary services to their clients, is the person that you're going to be dealing with also a tax agent, a financial planner, or are they wholly and solely devoted to self-managed super fund audits or other types of audits? And probably one of the other key things to look out for is how many registered self-managed super fund auditors do they have within the practice? An important point to note is that when you do sign, or sorry, when an auditor signs off on a self-managed super fund, it's on an individual basis. It's not on a firm basis. So it's the individual that's signing off, and whether or not that individual is going to be consistent throughout the course of the annual period when they're undertaking your client's self-managed super funds. It's really important to include that within the client minutes or the self-managed super fund minutes in terms of who that individual is, and that usually occurs the year before. Whose name is going to go on the engagement letter, and whose name is ultimately going to be signing off the audit report. And you'll see in the audit reports of self-managed super funds that it refers to I, not we, as a firm. So who is that key person? Can you talk to them? Can you interview them? Is it someone that you can build a relationship and be able to resolve complex or technical matters on a sort of timely basis? In terms of client support, if it is another important matter as well. So who's going to be taking care of the administration of the workflow? Not necessarily the auditors themselves, but if you have an administration query, or you need to get an audit report dispatched and you need that person to follow it up internally, who is that person? Are they approachable? Will they provide adequate support for the workflow? How long have the client support team been part of the firm? Is it just a brand new person to the firm because they've just grown, or is it someone that's been there for 5 to 10 years that really knows what needs to be done, how to resolve issues as and when they arrive? And what does that client support team do to continually improve customer services? To their accounting firm clients, do they look for ways that they can improve efficiency? And when is the client support hours? So is it 24/7? Is it only 8:30 till 5? And how responsive are they? So don't hesitate in asking if you can meet or speak with the client support team, just to give a bit of a feel for how much support you can actually receive in that regard. Getting back to the technical expertise, you could ask the questions around in-house training programs. So do they do regular technical discussion groups in-house? What type of training do they utilise from an external perspective? Do they have someone internal that's sort of the head of education or head of their technical standards that's going to be available to address those complex matters that may arise from time to time? And how often is this training provided to their team? Is it a firm that it's just a churn and burn, or do they actually invest in their people, their process, and ultimately their product to get the best possible service? So really delving down and asking those key questions will give you a bit of a feel for what the firm's like, who the people are, and whether or not they're invested for the future. One particular question that we always get asked is, do we have an outsourced team? Do we outsource overseas? Is all of the work done in Australia? Where's the data stored? Things like that. What you can ask for, and I highly recommend it, is a sample copy of their engagement letter. So that engagement letter, and you probably want to stipulate that it's the engagement letter from the 1st of July this year, being APES, or Australian Professional Ethical Standards 305, which is the engagement letter standard, has been revised, and from the 1st of July you need to stipulate in that engagement letter whether or not you've got any outsourced services. You also need to stipulate cloud computing software that you utilise and where that data is stored. You should also be asking what other computer software or servers could potentially hold your client's data. So that could be a customer relationship management system, could be a server based on one of their local machines, or an overseas server. So really delving down and asking those questions around, okay, well, where's our data stored? Who's got access to it? How secure is it? And potentially asking for a copy of their security policies document or something like that, just to ensure yourself that that there may not be a data breach potentially of your client's data that you may be involved in in the future. So really delving down and looking at the outsourced team, where they're located, what the security is like. Obviously, since COVID, a lot of staff working from home, especially in India and the Philippines, they continue to work from home. So what security protocols do they have in place around that around the security of the client data? So really important questions to ask. Make sure you ask them, get that documented, just in case something does happen in the future. And ultimately, are the people independent? So where did they previously worked? As I alluded to before, there's that 2-year period that you can't come out of sort of a network or a firm and continue to provide those audit services to clients that you've provided those services to in the past. So asking those key questions, who are the key people? Where did they previously work? Were they related or part of a previous network that you may be related to? And what is your or your other partners' relationships with the auditor or the firm? So really going through that process and documenting it to make sure that the firm and the people within it are independent and will be independent moving forward. All right, so the second P being process. So looking at the process that the auditor employs, a number of different areas. So are they proactive, for example? Will they check the right documents are in place and flag any gaps before the process actually starts on each audit? Do they offer an online portal to streamline communication and provide status updates and try and automate that from a communication point of view? And how is this communication or client communication managed? So I'll delve down into a couple of those key areas. One particular area that's quite important to make sure that you do set up the relationship well from the start, and that you ensure that it sort of gets off on the best foot forward. Looking at, what's involved in that onboarding process. So there's a lot of data set up in terms of, client data and jobs and training, having that dedicated training and support to know how their systems work, know how their audit program works, what they'll be asking for. One particular area, and obviously if it's going to a brand new audit firm, is doing an opening balance review. So the auditor will potentially, well, under the standards, needs to undertake to review opening balances. Otherwise, they'll need to qualify their audit report in that respect. So whether or not your clients are happy to receive a qualification, or what's involved in terms of doing the opening balance review. Do you have to pass on, and ultimately you will, pass on your opening balance work papers from the previous financial year. There's obviously a number of permanent documents which are carried forward, so that first year may require a bit of additional work. Digging out those permanent documents and providing those in the first year always takes a bit of time. Some of them might be in hard copy or soft copy, really identifying and dedicating the time that's required. We've put forward in some circumstances where we'll actually come on site and assist the firm to go through those permanent documents and identify that anything that may be missing or might have got left astray over the years, so that they've got adequate time to follow that up and either locate those documents or put things in place to make sure that moving forward they are there and be carried forward each year. Identifying any complex matters as part of that onboarding, so items that may not have been picked up in the past. There'll be the issue of ethical letters to the previous auditor, so identifying who those auditors are, or it may be one particular auditor, whether or not that may cause issues, but there's time to be able to prepare those, and keeping in mind that that's a mandatory requirement under the standards or the APES 110 in relation to audit engagements. So those ethical letters need to be sent. If your new auditor is not sending those ethical letters, then I'd question why and make sure that they do. And there'll obviously be additional time for the accounting firm to get used to the new systems, the processes. So you need to allocate that time and make sure that you've devoted enough time to the initial onboarding and setup, and so that things don't sort of go astray. And finally, you'll need to or potentially ask for a service level agreement. So, expectations around billings, turnaround times, security of data, as I mentioned before. Make sure that that's agreed to and documented, and that you've got that in place before you undertake any engagements or potentially pass on any engagements for your self-managed super funds. Now, some accounting firms, audit firms may have an online audit portal. It obviously makes the process a lot more efficient if they do. If I go back to the day where we had, going back probably 10 years, we had green folders, everything was photocopied, very inefficient in terms of the document management and being able to check things. So ideally, you'd want your auditor to have an online portal in place. And what does that online portal do? Can you get a demonstration of the portal that they can step you through step by step, what happens and when? Are there any other options available? Does the online portal potentially connect with, this key question asked, does it connect with the administration software? And does that eliminate a lot of the documents that may need to be provided? Can they streamline that? Can they source that information from the administrator? The administration software, so that you don't have to scan or save and upload copies of those documents. And what other audit software does the auditor use, and what licensing arrangements do they have in place with the software provider? Because if that it's just around continuity of data as well, and ensuring that there's a strong license agreement in place for that auditor. Now, the document upload, you want to make sure that that's as efficient as possible. You don't want to have to upload absolutely everything. So really getting a clear understanding of what the auditor will request. They should have a document checklist which outlines what documents are required to be uploaded. There's talk in the future that a lot of these documents will be able to be sourced directly from the administration software and effectively sucked into the audit program or the audit system. So that's something to look out for in terms of the development of that software, if and when that may become available, because that will obviously eliminate a lot of administration time on behalf of the accounting firm. So really look at that, ask those questions around what we need to provide, and whether or not you need to provide, all of the individual documents in a certain format, or if you can just zip them all up, put them in one folder, or if you can just scan one entire document. Obviously that will take time at your end. So if you can eliminate a lot of that time, that'll obviously save time and costs in the long run. As I mentioned earlier, get a copy of the engagement letter or the sample engagement letter. Talk around about how that engagement letter is going to be distributed, how you get access to it. Do you need to provide it on to the trustee, or will the auditor do that? How is it sent out? Is it via email? Is it via the portal? Does that firm or audit firm have to prepare that manually, or do they have mail merge functions in place? Because that'll also, obviously streamline a lot of the administration side of things. And does the auditor require a new engagement letter every year? It's our firm's best practice that we do reissue it, and generally there's a change to the SIS Act every now and then, which requires us to update it, but we've just taken the approach that we require it every year. It just demonstrates that the trustee has engaged us for that particular year, and we've got that document in place, and we don't need to go back and sort of double check if we had it from the previous year. The trustee representation letter, how does the auditor use a standard form? Is it different to the standards, or have they got other particular areas within that rep letter that the trustees need to represent? Once again, how is it distributed to the client, and at what point of the audit? Does the auditor require all of the trustees and the trustee directors to sign this letter, and how is that facilitated? Can it be done by electronic signatures, or does it have to be done by wet signatures? And will the auditor release the audit report without the signed representation letter? If they say that they will, I'd question that, because they really shouldn't be releasing the audit report until they've got all of those full representations from the trustees. And obviously a lot of that impacts on the efficiencies around when these documents are issued to the client or for signature, and when are they required to be given back to the auditor. So really delve into the process and the workflow, and ask some key questions around those engagement letter, representation letter, and ultimately the release of the audit report. In terms of queries management, how are those queries managed? Are they verbal? Are they email? Are they online via an online portal? Ideally, online portal is the way to go. That will give you sort of a chronological record of what was requested, what was provided, and obviously what was ultimately resolved. It'll then be a permanent record of what queries were raised on a consistent basis. And can you obtain a sample list of fairly standard queries that the auditors raise? That'll give you a bit of a feel for how pedantic they are in terms of their requests, how detailed or how professional they are, or how technically astute they are as well. So if maybe you can ask for a sample of a few queries that they generally raise on a consistent basis, that'll give you a bit of a feel for that. And what's the auditor's expectations in terms of query response time? There are provisions obviously in the SIS Act that the queries need to be resolved or need to get back to the auditor within 14 days. Otherwise, potentially it's a breach of the SIS Act. So those expectations are obviously on the auditor, and you need to have a strong understanding in terms of your expectations as the client's accountant. And how hard and fast the auditor is in terms of determining that breach, and obviously issuing that to the ATO via a contravention report. And finally, probably one of the most important is the communication and the relationship with the auditor. So does the auditor have a documented communication plan in place? Do they verbally explain complex audit matters, or do they just put it black and white, this is what you need to do, no exceptions, or are they willing to work with you and explain how you might be able to put a resolution in place for your clients? and how accessible is the SMSF registered auditor. So that sort of comes back to, as I was talking about with the people, how many registered SMSF auditors do they have? How many super funds do those individual SMSF auditors sign off on? That'll probably give you a bit of a feel for how accessible they may be, because ultimately, if you have got a difficult question or a difficult client issue, you want to be able to talk to them on the phone and make sure that they're very accessible and that they're not available. And finally, in terms of the final product, so can they help you with the difficult situations? Do they offer support? This could include 24/7 business support, technical support. Okay, sorry, I'm unmuted now. Sorry, I was just muted for a minute there. Back again. Okay, so in terms of the final product, very important, looking at the turnaround times. So asking those questions around the average turnaround time. Will these turnaround times be impacted by the significant growth in that firm's business? So really getting a feel for how many they currently audit and how many super funds they may audit in the future. So if they're going from 1,000 funds to 3,000 funds overnight, how confident are you that they'll be able to turn around those super funds in a short amount of time? And does the firm have the capacity now? And what are their plans for the future? They're looking to get to 10,000 or 20,000 super funds, and are you just going to be a number to them, or are you still going to be a trusted client that they're going to service well? And as I said, that you'll be able to get the answers resolved to the person that's ultimately going to be signing off on those super funds. And does that turnaround time? And I'd say that generally the turnaround times will generally exclude query time. So if you need to go back to the trustee, that's generally excluded. So what we're seeing in the industry and what's coming through is anywhere from say 3 to 10 days. Well, sometimes if there's a special request in our firm, we can turn it around within sort of 24 hours if it's an exceptional circumstance, but obviously it excludes that query time. So obviously it doesn't take that long to work its way through an audit, especially if the auditor's got very good systems in place. So yeah, it's something to look out for in terms of the turnaround times. Ultimately, the final products that you'll see coming through is the independent audit report, the trustee audit letter. So that's what we call in the audit world a management audit letter or an audit management letter, which identifies issues, and the ATO auditor contravention reports if and when they're issued. So just wanted to touch on them. Ask for a sample copy of the independent audit report. So you want to see that it's formatted well, it's up to date, and it's got applicable references that are up to date. What potential audit report qualifications does the firm generally include on average? So do they have consistent issues that come up that they do qualify? Do they qualify on opening balances? Do they qualify on market valuations in terms of the SIS legislation? And how is that audit report distributed to the clients and at what point? So is it obviously at the very end once everything's been resolved, or do they have they'll let certain things go until next year's audit? And how does that process work from a workflow perspective? In terms of the trustee audit letter, ask the question around what typical issues are raised in the auditor's letter to trustees. Does the firm use professional judgment to determine what's included or excluded from the letter to the trustees? So really just getting a feel, maybe asking for a sample of those topical issues or typical issues that may arise from time to time. And thirdly, the ATO auditor contravention report. So on average, what we see out there, and the ATO sort of come out and said this, that they'll generally see an industry benchmark of around 1 to 2%. So if that firm's undertaking, as an example, 500 self-managed super funds, then you would say that on average 5 to 10 of those super funds would have an ATO contravention. Or do you ask the question, are they way out of the benchmarks? Do they just issue them, in the first instance and don't consult, or do they have no auditor contraventions? That'll give you a bit of a feel for, I suppose, how professional that firm is, or how pedantic they are as well, and delve into how do they communicate the auditor contravention report to the accountant and the trustee. Do they just go directly straight to the trustee, or do they consult with the accounting firm? Try and get a resolution in place before that ATO contravention is issued, or is there other mechanisms in place to really discuss it and talk about it? And does the auditor apply materiality when determining that potential breach? I'll just finish off on these last 3 points. Pricing models. So probably the number one question that we get, people just go straight to the price. How much are you going to charge me? Can we go a fixed price model, or are there any other models? So what we're seeing in the industry is that majority of firms are asking for a fixed price model. They want to know what they're up for. They don't want to have varying prices. And what we're seeing in the industry is different pricing models. Generally speaking, there's a volume-based discounts. So if the firm has got a significant number of self-managed super funds, so it might be 100, 200, or 300, or and beyond, then working with that one particular firm obviously provides economies of scale. You can work with the key people in that firm to streamline the process and obviously ultimately reduce the time taken, and build the confidence in the data that's coming through. Another option could be a variable price model. So depending on the complexity of the fund, you could charge based on a very simple fund, could be a low price. A very complex fund could be a fairly high price. But that's quite arbitrary and quite difficult to put a model in place. One thing to consider with the volume-based pricing, and generally speaking, it's because it's the accounting firm that's getting that volume-based discount, whether or not you need to consider whether or not that discount should be passed ultimately onto the client. If the client was to go out and get an audit from one particular firm, it was just one-off audit, obviously that volume-based pricing wouldn't apply. So firms should really consider that, and whether or not they should be invoicing, or the audit firm should be invoicing the accounting practice directly, and then allowing that accounting firm to do I suppose, an administration recovery margin or something like that for the additional time of having to deal with an external auditor, but potentially adding a margin within the bundled fee, because ultimately they were the firm that obtained the volume-based pricing. We see other options as well around direct debit monthly retainers. So, if you say you're going to give us 100 funds, or you're going to give us 200 funds or 300 funds, then you've committed to that number of funds on a monthly basis, and then the retainer will be X amount and will direct debit your bank account on that basis. And that obviously gets invoiced to the firm. The firm's responsibility for paying that, and ultimately the credit risk will then be held with the accounting firm, not the audit firm, because the audit firm's been paid directly from your bank account, but then it's now your responsibility to recover that from the trustees on an ongoing basis. One thing that you want to consider is that the audit fee model does not restrict any required audit time. So, you don't want a situation where you just go for the bottom dollar. We've all seen those providers out there, they'll do it for $200, $300. Does that restrict the time that's needed if there is a complex audit matter? How does the firm deal with those complex audit matters and ensure that the time's taken to resolve those issues, and not just push it through, because ultimately you as the accountant and the advisor may be open to risk if the audit doesn't pick up or doesn't deal with matters as they should be. Once again, you want to make sure that you've got a service level agreement in place, and that's up to date. Revisit that every 12 months. And does the firm or the audit firm charge any additional fees? So, they may have a base model price. Things to consider there are title deeds, searches, company search fees, any additional limited recourse borrowing arrangement, review time, amended financial statements, contravention reports, significant matters. Does the firm require bank audit certificates to be done for every bank account? Just what are those additional fees or hidden fees? Or there may be some requests for advice or assistance with, with complex matters. How are they charged, or are they just complementary to the, I suppose, the service that they're providing? And just finish off with feedback and support. So I mentioned this earlier, but does the auditor provide ongoing feedback on consistent matters that arise? So if the auditor can, this is something you should be seeking out, is that, can you give us feedback on what we're doing well or what we're not doing well, and where we can improve in terms of providing the documents to you, and how can we make it more efficient at our end, and ultimately more efficient for the auditor as well, because it's in the best interest of everyone involved to continue to build that relationship and build a streamlined model and process, so that you put your best foot forward on every audit. And lastly, quality control. So some of the things that you could be asking the auditor is, when was the auditor's last quality control review by their professional body? And you can ask them, were there any significant matters raised? Are all of the, so obviously if they've got a SMSF registration as an auditor, they need to have a public practice, and they need to undertake regular quality control reviews by their professional body. The top 100 auditors, not last year, the year before, were reviewed by the ATO. So you want to ask for, what were the results of that review? ATO is now reviewing the top 100 to 200 self-managed super fund auditors. So, ask what were the issues that were raised? Were there any significant matters that were referred to ASIC for those individual auditors? Does the auditor have an up-to-date risk management framework in place and quality control manual? Can you get access to that? And finally, does the firm undertake regular internal quality control reviews themselves, and what are the results of that? How often are they undertaken? Who undertakes them? That'll give you a bit of a feel for how quality the firm is. So sorry I've gone a little bit over time. Hopefully there may be some questions. I'll just pass it over to Dale just to read out those questions if there are any. I'm more than happy to answer them. We've just got a couple of minutes left, but happy to go over time.
Thanks, Steve. Yes, we've got a couple of minutes, so we've got a few questions, and if there are more questions, then I'm sure Steve will be accessible after the session by email. Two questions relate to reliance on accounting sources for referrals. One is a specific example from Leo. He's asked, what if my firm generates about 40,000 audit fees out of total turnover of 600, and that 40,000 is distributed between three sources, of which one is 80% of the total audit fee? Will that be a problem? So basically 40,000 out of 600,000 total turnover, 40,000 three sources, and 80% is one source.
Yeah, so if we're talking specifically around self-managed super funds, obviously the 40% of the 600 isn't material, but it could be from a partner perspective. So depending on your individual funds that you're producing, so the fund may have multiple partners, but let's hypothetically say that it's just yourself. I'd say no, it wouldn't be an issue. But what could be an issue is the 40,000, and as you said, 80% of those come from one source. So obviously 80% is obviously a significant number. So potentially I would say that, yeah, that could be an issue. Well, happy to have a look at it. Happy to give you some more advice. If you can give me some more specifics, we can talk about that offline. But yeah, by the sounds of it, there may be an issue, but then again, after looking at particular details, there may not be.
Thanks, Steve. Next question is a similar one from Graham. Can you justify a greater than 20% reliance on source? You'll probably answer that question, but anything else to add?
So no, I wouldn't say there's anything else to add.
Yep. Okay. Could you please repeat the reference to the regulation re-engagement letters as of the 1st of July 2021?
Yep. So APES 305 engagement letters.
Okay, so that's the reference. Okay, thank you. Jan's asked, where can we obtain a template of the new engagement letters? I'm not sure what the answer to that one.
You can go to 8305, and as I understand it, there's an annexure to that, which will provide a template and some. Obviously, if you just do a search of that as well, there's a number of other templates. But if you reach out to me or our firm, I'm more than happy to provide a sample of that. And that applies to all engagement letters for professional services in the accounting space. So if you do currently outsource out overseas, or you've got your cloud computing that's held overseas, that now needs to be detailed in your engagement letter.
Thanks, Steve. And a last question. I don't know whether this is a difficult one to answer. What is an indicative hourly fee to audit?
A self-managed super fund?
Yeah.
It varies, but on average, probably 3 to 6 hours to do a self-managed super fund audit. What we're seeing in the marketplace is fees varying from $300 to sort of $700. Seeing a number of suburban firms that may only do sort of 20, 30 funds, their fees may be up around $900 to $1,200 a self-managed super fund. And that sort of is reflective of the fact that they only do a small amount of numbers. They're probably quite inefficient in what they do. So it really comes down to how much the people are being paid within that particular practice. But I would say as a general rule, around $150, somewhere from $120 to $150. So if you're looking at sort of 3 to 4 hours, anywhere from sort of $450 to $600 a fund. But keeping in mind there may be amounts for if you're doing multiple audits, and that can streamline or reduce the amount of time that's spent on a particular fund, because you're getting more confidence in the data and the documentation that's coming through, and you can potentially undertake those audits much more efficiently. So there's a number of factors to consider, not just, I suppose, the hourly rate, time taken. There could be, as I said, a number of other factors that come into the pricing model. And you obviously got to look at if they're outsourcing overseas to somewhere like India or the Philippines, the hourly rates for those team members are a lot lower. Therefore, the hourly rate that's obviously used in terms of time costing may be a lot lower as well. So they may be spending 6 to 10 hours doing those audits and doing them quite thoroughly. Then again, how inefficient are they being, and how well trained are those individuals?
Great, thanks, Steve. And that's all the questions we've got. We're just run a few minutes over time. As part of the follow-up to this presentation, we'll provide a link to the recording and also a copy of the notes, and also contact details for Steve if you'd like to ask further questions or inquire further into his specialist knowledge. Thanks very much again, Steve. Thanks to the audience today for participating, and good luck. Cheers.
Excellent, thank you.